Hey everybody. So that was a nice day in the market today. I'm sure everybody was pretty happy. It's much nicer when I can put a heading on this that's going to say market meltup instead of market meltdown. And I mean, that's pretty much what we had today. And we're going to review it. We're going to review a lot of stocks. I know it's frustrating, especially with yesterday. 1 minute you're long, the next minute you're short. But we're going to review what happened today, why you should have looked at buying on that dip in the morning. And we're going to go from there, but let's just jump right into it. As always, subscribe to this channel, turn on notifications, and please make sure you turn on notifications because I'm going to start doing more intermittent live streams just out of nowhere, like when it's important timing wise. I was going to do one this morning, and I'm just going to throw them out there from now on if I see something. So if you want to be aware of them, you're going to have to click the subscribe button, and you're going to have to click the notifications, I believe. So let's just get right into it. Let's get into the first one. I am going to walk through FUBO tonight. I'm going to walk through the trade, why I bought it after hours, the whole 9 yards. So it's moving after hours. It's moving kind of nicely. So let's get into this APPS. Everything's in alphabetical order as always, so you can just kind of run through them. Someone will send me timestamps as usual, I believe, and I'll put them in there. So APPS, you're going to see this a lot on charts today. Yesterday was a great day. Is anything resolved? Okay, let's just get this out of the way right now so that you don't have to watch this whole thing if that's what you're trying to figure out. Nothing is resolved today. Nothing. And I really want to hammer that home. Like, was this a good day? Yes. Did we make money today? Hopefully everybody made money today. If not, it's okay. It happens. On to the next day. Not a big deal. Don't make it a big deal. It's not. Stock market's not going anywhere. Just keep that in mind. So, but let's review. A lot of these charts just really went to key levels. They didn't do anything. Tomorrow is a much more important day. The week is much more important. So let's just take this. I don't even need indicators for it yet. You can see what happened here, right? We gapped down, opened here. Everybody panics. They sell down, they rip it off the open, and then it's gone. And I show this pattern for people, and this is pretty thin, and that's why it looks like that. But, I'll go to a 5 minute. That'll speed this along. So, I'm not going to be able to really do. Let's get rid of this volume, and let's just focus on, this is not going to work on 1 minute. Let's try a 2 minute, see if that clarifies it a little bit better. That's not going to do it. So we're going to have to use the 1 minute. We're not going to really have a choice here because I really want to hammer this point home. So this is the open. This is your opening bar. Okay. And what you can see is let me just try and get that over here. And let's open this way up. Okay. So what happens is you open. Okay. And this all happened within a minute. So you opened. So you're watching it. It comes down and then goes back over the open. It's all you needed to see. As soon as it opens, goes down, goes back over the open, and goes above your stop, if depending upon how tight you want to be. But on these, you need to be tight because this could have just been down 10 points like nothing, right? So that's your stop, right? It's literally that tight. Okay. And no, this is not a day trade. This is something that you're trying to stay in. But you're trying to get the best price. And if you get stopped out of it, so what? You just wait and you get in it again. And doing that trade in that simple move would have got you in the stock at the low. And if you walk through the charts today, you'll see that pattern a lot. And it's a very easy way for you to get in there. I'll give you a couple more as we run through this. We're going to do 30 that I think are actionable. We're going to do the indexes and sectors as well. But in regards to APPS, let's just overlay these bells and whistles real quick. What did we do? We came down to the 200-day. Let me show you something. If you put pre-market data in, what did it do? Right? Look at with pre-market data. It went right to the 200-day. What else did that today? Tesla, right? So it does have value to look at pre and post-market data. I use TrendSpider. It's just a click to throw it in to get rid of it. But so what you see is you still have the 50 and the 20. We're still rolling. Now, what was good today about APPS is we got, and let's get into this, you got to the top of this channel, right? You broke it like, oh boy, frozen rope. This is going to be ugly. I hope we hold the 200 and I don't, get crushed. What's it do? Reverses, goes up 10 points. Okay. Monster day. The question becomes what happens tomorrow. Right now, it's irrelevant. We need to see what happens tomorrow. You need to get a higher high here tomorrow. Now, as crazy as this is, gapping here and closing here, we have a bullish engulfing. Sometimes it respects them like here and we get a couple days out of them, and sometimes it doesn't. But that's one data point. And I think it's one that you should be aware of. Would I run into this? No. Let this thing work itself out. If you're really, hell-bent on owning it, and, I curse on here, I'm going to try not to do it as much, or at least say heck or doggone it, or I'll figure it out. I'll get better. But what you want to see here is you get a higher high, but that's really going to take you to 70. So if you're looking for an 8-point trade, it's there on a higher high. But, be very careful. I did short some things today on this rally. But overall, I think that we should start looking at being long. And the delevering took place that we were looking for. And we got signs of that today, which is good. I'll address that in the newsletter. Newsletter is free. Comes out 3 times a week. There's a link in the bio. And as always, as always, it started yesterday. Right now it's as always. I have an email address. Some people have already written to me. If you have longer questions that are in long form, just write. It's arete@aretetrading.net. It's just arete@aretetrading.net. Just shoot me an email if you think I could be of help, or you have advice on this, and how I can make this better. Let me know, because I want to do more and more. This is just the beginning. I want to get people proficient at this so that they don't really even need me, right? They just come out with their own ideas and know how to trade them. That's where we're going with this. That's where I want to go with it, I should say. So see this blink, you came down here, you broke, you bounced right off the 200-day. How many times are we going to see that today? That gap down, test, boom, goes. What do I think you do with blink? Look, it has not been able to close above this 21-day. I have no reason to believe it's going to now. Now, down here, that was a great place to trade it. It was a great place to buy it. I'm not buying it there, right? I'm concerned. I need to see the open and the flip. And frankly, you have that double bottom down here that you didn't break. So, these can roll. This is not the first time we've had a 10-point move. Here's one, or a 6-point move rather, 20%, right? So you have to keep that in mind. Now, Cliff, okay, this is troubling. And oil in itself ran into a brick wall, and we're going to get into it. The big sign for oil was yesterday. You have trouble in the Middle East, and oil went down. That's not how it works, unless it's already been interpreted that there were going to be trouble in the Middle East, and then oil spiked ahead of it, which is exactly what happened. And we're going to get into that. But let me tell you what I think you're going to have an issue with here on Cliff. Okay. See this reversal bar? And people that follow the newsletter, they'll remember this. Let's just get really technical, right? And I don't even need these indicators. They're pointless. So see this trend, this channel? What did we do? We opened above it, ran up. What is a wick? A wick is price rejection. Bonk. Totally rejected. Opened, closed here. Oh, this is going to be our day. Nope, it's not going to be your day. You're not getting above this, right? Look, we're not above this. You need to pop back above this if you think you're going to have a shot at continuing. If you don't get above this line and close above this line, you need to be really careful here. This is really setting up for a nasty reversal. The fact that even on a day like today, we couldn't get above the previous day's open when everything else did is a telltale sign. And the fact that the XLE was down more for the first time in probably a month than the SOX was is a telling sign. The XLE is the energy index. So just watch this level. I would not be a buyer here. Watch this level. We need to close over it. You could still be in a secular bull commodities market, but I think the commodities are done for a little bit. And I think it's going to be a real issue. Cloud, I'm throwing in here. I went long this today. You can look at the Twitter for my price point and everything. I liked it. I sold it right when it ran into here. Okay, so you see this line right here? As soon as we went from here to here, where'd we go? We went right to that line. We closed right on my line. So I'm like, there's no reason to stay in there, in my opinion. Maybe I flip, maybe I don't. This is a huge bar, but I could roll here too. Then we throw the indicators in real quick, and you see we're below the 200-day. So instead of just playing this, what I would do here is just play individual names. You have to understand something. Just because you have a monster day and we were delevering, and again, I'll get into it in the newsletter, doesn't mean it's over. It doesn't mean that I'm not going to get more opportunity. If you think that you're just going to go straight up now, you're delusional, and that's when FOMO kicks in, and then you buy, and then they roll again, then you sell, and then they base, and then they go higher, and you feel like a ping pong ball. You have to understand it's not straight up, it's not straight down, right? But there are patterns. You have to recognize them. But cloud, look at net, take a look at net. Put that out there. That's solid. We're above the 200-day. Does net have a stronger relative strength than cloud? The quick answer for people that pay attention is yes, because cloud is below, which is the ETF of these stocks, is below the 200-day. Is net below the 200-day? See, I already know the answer to this. Right? No, it's not. Okay, so let's keep going. Right? Crowd. Okay, it's above the 200-day. D-Dog. Okay, below the 200-day. Which of those three do you buy? Right? Okay, well, you don't buy D-Dog, right? Because that's worse. Okay, this one's below the 21 and the 50, right? And crowd, okay, is below the 21 and the 50, right? So either one of these, now you could just say that this has a bullish engulfing. So that gives us a little more. And we've also broken this downward trend line here. Like here, look at this. Right? Well, we've broken this today. We haven't broken one of those in a long time on crowd. Well, guess what you did today? You broke that, right? Higher high on that probably takes you to the 50-day. At least you get in there, right? Same here. What do I have? A bullish engulfing. Either one of these trades work, okay? The volume here, we could use that as an indicator. That was above average volume. And see what we're doing here? I'm whittling down which one to do. Okay, so this is clear. My red volume is greater than my green volume here on crowd, right? And now we're here on net. Okay, that didn't happen here, did it? Which the stronger stock? See how we learned all these little things and then we put them together and come up with a thesis? It doesn't mean that the thesis is right. It just means that we have a thesis. So that's the plan. So which one of these on cloud should we buy after we looked at three names? Cloud, right? Or crowd, CRW, right? D. And then you're looking for, it's been a long day. You guys are going to have to bear with me today. So you're looking for a higher high here. You need 195.50, right? And then you go from there. But I like that. CME I was asked to look at. This thing looks like it's ready to rock and roll. And it makes so much sense, right? Because if commodities come in, you're going to just start seeing huge put volume, massive volume. And I think that that's what's telling you here. I think that this is telling you that you're seeing a top in commodities, which means lumber gets hit, Home Depot, Lowe's, all the stuff that we just started buying. That's why I said yesterday on Twitter, start being a little careful, start honoring your stops in your process because nothing was going to be safe today. Nothing was safe. So I'm looking at this RBLX, and that was a missed opportunity, but we're going to get to that. So CME, I love this chart. Like, absolutely love this chart. Would not be surprised to see this in the newsletter. It's been on the short list. There is a trend that's going up here that takes this to 250, 265. What would I wait for is this. Get me above the doji bar. And what happened at that doji bar? It was a top. How would we know that was a top? Because here we broke out. Boom, there's the open. Here's the close. There's the little doji where we're in the middle. And then I break below that, don't I? What's that? Gives me an evening star pattern. What do evening star patterns recognize? Usually tops. Boom, there's your top. See how you come down here and there's the morning star. Boom, and then it goes. All right. See why this stuff, see why I keep linking the candlestick video over and over and shoving it down everyone's throat? That's why. Because it works. So if you can identify the patterns, you can do this yourself, right? You can start overlaying them, develop your own process, your own style. You don't want to trade like me or somebody else. You want to trade like you. You know your risk tolerance, your preferences. That's what you have to do. So anyway, 216.61. That's enough of the rant. 216.61. Get through there, and I'd be all over this. I really like this, and I really like how the volume profile is picking up. Great idea. Crocs, look, I mean, I've been talking about this. You knew we were going to roll. You had a bearish engulfing yesterday, so you knew that this was going to come in, right? But what did we do? We opened, and then you closed near the high. I don't see any reason to go near this. I mean, it's had a very nice move. This is your stop. A close below this line would get me out. If the 21 ever catches up, the 21 will become the move. You could say that I want to use my 8 or my 21 or my 5. Why? I mean, all they're doing is playing catch up to a gap. So, how do you use an 8 and a 5 as a metric after you gap? 1, 2, 3, 4, 5, 6, 7, 8 days. Doesn't make any sense, right? I mean, you kind of have to think about this stuff logically, right? How do you use an 8-day moving average on 8 days or a 5-day moving average on 8 days? It doesn't tell you anything. So, and then people are going to act on it. It's irrelevant. So you use this trend line and that'd be more active. I would not buy this because it's had such a huge move already. And the stuff that's depressed when we base and when we bottom and base is going to move faster than the stuff that's broken out. Just the way it is. Doesn't mean it's going to consistently be higher. Just means right now it's going to be higher. I mean, Crocs crushed it. I don't know who's buying those things, but they outright just crushed earnings. So let's go to the next one, DDD. This is a classic example of me not being prepared and not being aware of certain earnings dates. If we remember what happened, last earnings date was this, right? We just absolutely annihilated. This thing closed at the 200, gapped up on an awful tape. And frankly, I just had so much going on. I was not prepared today for it. But look at this. I mean, let's get rid of these. Just look at this gap. I mean, it's just so big, right? And here's exactly what I was getting at. So you gap like here, right? So you have this gap risk, right, that you have to fill. So you're like, oh, well, I don't really want to buy it here because my stop technically has to be here because this is your risk, right? Like there's air here. There's no way to just, you could pick a dollar amount, but it's just like, you might as well flip a coin. But what happened today that worked on the 1 minute? Well, we opened, we came down, and we closed above it. It's all you needed to say. Based upon that one bar, you could have bought and then used this as your stop, right? Would have got you in at 20.30 and your stop would have been 19.75. Doesn't mean it's not going to work or it is going to work, right? It just means that that's one way of in. Now, if you look at something like that and your loss is 75 cents and then you're up $2, $3, well, that makes sense, right? Go do that 100 times a day. And I'm not saying to trade 100 times a day, but you see where I'm going with it. If you do a trade like that over 100 times, it's going to work. And that's really what you want. And that's what you want to see, right? You want a pattern and you want to be able to do something that is consistent. So let me do this real quick because I want to show you this while I'm thinking about it. So let's do it on the monthly. Okay. And then we're going to shrink this down and go over here. And we're going to shrink this down. Perfect. So I just want to point this out. Let's bring this way down here. Okay. So I just want to walk through this. This is what happened last time. Okay. This is on the monthly. Okay. I understand the month is not over, but this is why it's so helpful to look at different time frames. Okay. That's a key level, right? We want to close above the 21.76 level. Closing above that would be good. And that's what we're shooting for right now. And that's on the monthly. But this is a huge bull flag on great earnings on a monthly chart. I don't know that this is over. I closed above this whole gap, which means I also closed above this, right? What does that mean? That means that my next target is really here. So, I mean, this could have legs. I mean, this could really go. Now that I'm above this, your next short-term resistance, and it's not even a major resistance, is right here at 28. So there's nothing there to stop this from going up now. We get throw in the indicators and see, get through. I mean, I don't even think the 50-day is going to be an issue with it because of earnings and the volume that came in today. So a higher high on this, and you could think about playing this for a trade. $28 would be your first target. ELY, we saw another one of these the other day. Which one were we looking at the other day? Golf. You know, that one broke out. Now we're looking at ELY, Callaway. Yeah, I mean, this is a classic breakout. I mean, there's really nothing else to say about it. It's just a classic breakout. You know, 32.58 is your swing. You got above that, and it just went. And like, look at the volume and how they were curling up. You know, the issue becomes, where does it go? Well, these stocks have had a decent run. So there's a line right here that you just have to be aware of, right? Let's just get to it. See how we just bonk, 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 hit here, 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 here. And again, if you don't see these right away, just, you know, don't freak out. I've been doing this a long time. So I've been doing this over 20 years. But you see how this technical line right here, you see how we stopped right here? Yeah, that might be a thing. That might be a reason not to follow through. Now, tomorrow, if we get above that line, you could go parabolic. So really what you're looking for is get me above this nut line, and then let's see what happens. So you really need to not think about buying this to 34.25, and then be prepared that if you close below this line, right? Or if let's just make the math easy. If you close below 34.20, right? You're going to go 34.25. If you close below 34.20, or actually if you close below 33.90, you're going to get out. Right? That would be your game plan here. But could this go? Absolutely. But you can see how we rejected here and how we've been respecting the line. So just be aware that that's out there and that's a resistance point. FCX is in the newsletter. You know, I got to be honest, I am really happy how this held up today. I probably am going to tell people in the newsletter tonight to just possibly move on. Lock it in or move your stop up to your break even now. You know, one of two options. I'm very concerned about what I saw happen in commodities the other day. So I'm just going to be blunt. Like in the newsletter tonight, you're going to see the stop moved to your break even or just sell it. I'm really concerned. I don't know that we're going to get to this level without rolling here. We might get another pop tomorrow, in which case I would sell into that as well. I'm seeing signs that we just got toppy. I mean, look, I know no one here looks at commodities. I do just so I know what's going on, right? I don't trade commodities, but lumber in 2 days is down 11%. Okay. The CME is picking up. We just went through this, right? There's a reason why the CME is picking up, right? That's where they trade commodities. They must think something's coming, right? If this is what they're doing. I mean, you know, we know who's buying this. It's institutions, right? It's not you and I sitting around going, I wonder if CME is going to have huge commodities volume. So that's the way that I would play this. If I was in this and I bought this today, I'd be thrilled and I'd be looking to get out of it. The fact that I closed right here is more of an issue, and I'm not really crazy about it. You know, you have this wick here. Even if I took out a higher high at this point, I'd be concerned. And I'm just going to show you this right now because this now exists, right? It didn't the other day, but now it's kind of there. So you have this one right here, right? But if you have that red reversal bar, you have another one, and it's right here. So now I have another little channel. And here's what I don't like. And I'm trying not to get too advanced because I don't want to, you know, people to go away. But what I want you to do is understand when you have these lines and the new line is less than this line, right? Meaning the trajectory has changed. You see how this was a much better trajectory than this? Like, would you have entered this trade if you knew that this might be your target? Probably not. You'd be like, I can make $1 or $2, right? But what happens now is the trajectory is starting to get less and less. That leads me to believe that this is toppy. So, you know, and I know that I was talking about a secular move and everything else, but the market's dynamic and you have to be dynamic with it. I'm not here to be right or wrong. I'm here to make money. FDX, you know, I got a couple questions about this with the options. You know, it's pretty clear. Hold it. I like this trade. I don't think shipping's going away because we sold down today. And I really like this. And yet 305.60 is our level. We closed above it. There's nothing to do here. Just hold on to it. And people that asked me today, I did say hold on to the options too. I don't see anything broken here. I really don't. I see a really nice trading day and actually setting up to push higher. FSLY, look, we had really bad numbers. You want to be in this space? We just went through which one to buy. You buy crowd, okay? But if for some reason this is your stock and this is the one you want to be in, I'm going to tell you, you're going to have a hard time with this gap here and this gap here. And now we're down here. This is a clear island reversal. And it's telling you we're going a lot lower. So you also have this trend line here that has established itself as now resistance. So I would not even consider buying this. I'm glad you had a good day today. If you are in this, I would not even consider buying this until you got above the high of the previous day, of that gap down and that red volume. I wouldn't even come close. Look at the green volume versus the red volume, right? I don't even need to touch it. Just look at it. What's going on? Are people buying it or are they selling it? They're still selling it. Now, massive red volume can signal what? It can signal a bottom when you have massive red volume, because there's no one left to sell, right? It's different when it's buying. There's always people left to buy, but to sell, it's a little different, right? See how you have the massive green volume and it could lead to us going up. Then you have massive red volume on this. What happens? Sometimes it still goes down for a couple weeks. That could happen here. You know, there's another little trend going on here that you should be aware of on this. Just pay attention that this is sitting out there, right? I don't think it goes much further. I don't think it really goes anywhere except here, but it's there. And, you know, you've been bouncing on it a little bit. So hold on. Let's just click on this, slide this over, go there. So you've been bouncing on it a little bit, haven't you? So let's just see how it plays out. But I would not run into this. If I owned it, breaking this line or breaking one of these lows, I'd be out of it. I would not be surprised to see this thing trade back in the 20s the way it's trading. So we're going to spend a little time on this tonight. I'm going to show you a technique. In regards to this, you need to be really careful, but look at what's transpired today. Okay. So the low was 1464. What's our level and our low? 14.25. Let's show this on a weekly. Like this just couldn't, that's not really going to help me. We're going to have to stay with the daily. So this just couldn't have gone any better for this stock. See how we held here, then encapsulated the previous bar. Look where we are after hours. Okay. Where did we go to? $22. Where did we stop? $22. Where's our resistance line? $22. Do you see where we're going with all this? Like, this is why you leave the lines in, right? This is why you keep them there. All right. So let's just keep rocking and rolling, and let's get into what I did and how you could have done it. So I don't speak on the fundamental side too much. I know how to read balance sheets. I've been doing it for decades at this point. But what I'm getting at with this, and I want you to understand, is while I'm trading this, I'm reading the news on what's going on. And when I see that they're guiding higher, I'm all over that. And when they came out and said that they were guiding higher, it was just those words on, 2021. You're guiding higher in this market and the stock's responding to it. Okay. This was your move right here. And this isn't where I caught it. Here you are after hours, and then it runs up. That's not where I got it. Okay, because I missed it because I was reading, and these things move very fast. Comes back down. This is my stop right here, right? I figure, it might hit resistance. 18.25. Boom, breaks out. That was it. Time to go. Okay, so when you're reading this stuff as it comes through the tape, if you know how to read it, that's when you get in the trade. Now, my stop was very simple. If you take out the close, right, of the previous day, I have to be out. So if you're playing after hours stuff, keep that in mind. Okay. You want to buy as close to the close as you possibly can, because that's really your stop. But I need patterns. If I don't have a pattern, I can't buy. This is a little mini flag. It's actually a 3-step pattern. I'm not going to get into it right now, but as soon as it does this, that's it. Boom, it's gone. 1, 2, 3. And then you can see now you have a little flag here. Then you break out of that flag. You could have bought here with this as your stop, right? Now you have a little downward trend. You break that. Now we hit here. Okay. This is where I was like, well, maybe I'll trim a little bit since I'm in down here and it's only been, 20 minutes and I'm up, 10%. So maybe I'll trim a little bit. Then I held it. Now where are we hitting here? Maybe I'll trim a little bit. And then now I have a free trade and this is my stop. Now people always say to me, well, how long are you staying in the trade for? You don't stay in very long. If this never goes to that place where I just showed you that I own it, I have no need to sell this, right? There's no reason to sell this. If it doesn't go back to where my cost is, why sell it? Just leave it on. I'm at the low. I mean, I really could be at the bottom here with this reversal. You could see another bar tomorrow that just goes right through this and takes you to $29. It was very strong numbers out there, and you have 18 million shares short. So this can go again tomorrow, and we'll see what happens. But that's how I traded it, reading the tape and also looking at the chart at the same time. And you need to know, if you want to trade pre-market after hours, just take this advice. Pre-market, the only thing that you need to be doing is selling into rallies. You do not need to be buying pre-market. It's too advanced and it's too difficult. I know there's people that do it and they do exceptionally well, and I do it, but until you are proficient at trading and you have a system, avoid it. After hours, I get, because the earnings are out and you want to see what's going on. After hours is a lot easier. So no one called me out on this cleat versus clear. So this is one that is in the newsletter. We went up, rallied, and reversed on what looks like an evening star pattern. I'm not crazy about the move. I'm not crazy about the sell-off at all. So, we might be at a double top here, and we're about to find out. So we're going to keep the stop and we're going to keep everything in place. But, closing below the 21 day is what we're going to use now as our stop. I do not want to close below that. I do not want to go for a ride. I'm not sure what's going to happen to lumber prices. I don't know how they're hedged with lumber, but they've been going up on it. So are they going to go down now that lumber's coming in? I don't have the answer to that. We're going to have to see and watch. But right now, if you're in this, just honor your stop, which is right here. And let's see how we do, and we'll go from there. So net was exactly what we talked about earlier. We reviewed this trade. To me, I'm not even interested in this 50 or 21 day. They're immaterial. And the reason they're immaterial now is why? Because we've been in a huge base. If you're basing since November, right? And this is how you determine your base, where the low is, right? See how we're not breaking these, right? Look, we undercut there. You can actually say it's a double bottom, but look at this. Isn't this cool? Oh, I think it's cool. Look where you opened. You opened right on that line, right? So if you were more proficient, you could have had a line here and said, well, we just gap below this. If I open here, gap below this, and then go above this, I'm all over this, right? And look where that trade would have gotten you in today. Okay, 65, 66, and now you're in. Now that becomes your stop. Either the low of this bar becomes your stop or your cost does. It's up to you how you want to trade. And then boom, now you have a shot. Now you have a real shot and in something that you may never truly have to sell unless you want to, right? So everybody trades differently. But my point is, and I went off on one of my tangents, is you see how these lines, they flat line? Like there's no reason to be in. There's no reason to use your 50 day or 21 day or your cloud or whatever the heck you want to use when your lines are when they're flatlining. What are they telling you? They're telling you they're going back and forth. Did you have to sell it when it broke the 21 here? No. Did you have to buy it when it did that here? No. Right? They're not telling you anything. Okay. Now, if you get rid of these and you understand chart pattern recognition, well, when you broke here, you were going to run. This is your stop. What happened? It ran. Okay. When this broke this flag, what happened? It broke. So pattern recognition inside bases is much more adept at probability of what is going to happen and makes you more accurate than using moving averages when you're in a base. Hope that is clear. If it's not, just reach out. Yeah, I'm glad NIO is not going to zero. I think this is the one of them that may be around for a while. And I like this, and I like hammer time. I like how we hammered, but look where you hammered too, right? And everyone knows this is a hammer bar. You hammered on this old line and this old line. Flip above this tomorrow, and this is going to be really interesting. You're going to see some buying come in on this one. It's a very popular name. People want to own it, 35, and boom, we did not close below it. We closed above the previous close, which is excellent. Let's get rid of the after hours action. And it shows even better, right? Closed almost at the high. So this is really good stuff. Overlay the bells and whistles with it. Look, you got all three forming at the same spot. All three of those are going to form at the same spot. It's exactly what you'd like to see when you're going to reverse. So Let's see what happens here. But you're going to have levels. Like the 200 days, no joke. That gets you to 37. I would not wait for these levels. I would wait and see if you make a higher high, and then I would be using this as my stop if I wanted to be in that. And you have to realize you're going to take risk. Pins, to me, Snap is better looking than pins. This below the 200 day does nothing for me. And I gapped down here and I couldn't even get over the 200 day on momentum today. So you need to get above that 200 day before you even consider buying the stock. I would not sell it. And it's one of the reasons why I have it on here. It's not overly actionable, but it's got to get over the 200 before you even think of buying it. So Planter, I went through today. This will be in the newsletter. Why will it be in the newsletter? And I'll walk through my trade. But look at this volume, and you could determine early that the volume is going to be huge. And we didn't break the 16. Earnings are out, so the earnings risk is over. And getting in there, I think we threw it out there. I'll have to go through the timestamp, but I believe the buy price area was like 19 and a quarter, 19 and a half. And this was a really simple one. So, and you can just see this, right? And that was it. Time to go. And this volume was just insane. You knew you were going to have a huge day. I think the volume was 400% greater than it normally was. So this will be in the newsletter tonight. And, I do think that you're going to get back to this 22 level fairly quickly. I think you see follow through tomorrow. And I would tell you to, if you're going to look at this, I would tell you to go out there and just look at buying the dips. Hope it comes in. There are stocks I'm shorting like Peloton, but I do think that this is set up to finally move. This was some pretty substantial volume today. So look for a higher high, go from there. Posh, I get it. You got to get above this 50 day. I understand why people want me to look at this, but look at this line. Look what's going on here. 45.45. Cannot get above that. You cannot close above that for some reason. You got stopped 1, 2, 3, 4, 5, 6 times. So, 45.50 close is what I would be looking for. So let's get into the cues and what transpired today. And we're just going to keep going through this in alphabetical order. Look, right to the 50 day and we stopped. I think it's great, but I did throw out this chart today and I do like the green volume. That's solid volume. And we did delever, right? So that is good, but we don't really need these indicators. They're irrelevant. So let's open this up and look. So this is the point I was trying to make today when I showed this chart, okay? That's where you closed yesterday right here. And let's blow this up big time. Okay. So that's where you closed yesterday. We got one day above it. This is it. We're going to go. Fails. Now you have this trend right here. Fails. And the more you fail here, the more this trend line becomes important, right? Because it's going to be a resistance soon. And you're not going to want that. So I'm not convinced that anything's over. All we really did was gap to a ridiculously low level with a huge undergap and come back up. I think that the worst is over and we're going to start basing and you can start building positions. I do feel that way. And I do think that tech is going to underperform. I don't think we're going to keep seeing the low beta push. The move ended way faster than I thought it would, but that's what's going on. And that's what's going on with the cues. So you really just need to watch that. I'll go into greater detail in the newsletter tonight, but you really need to watch those levels. There's some key levels I'll go over in the newsletter, but I just wanted to point this one out there on QS for the person that's interested. There is nothing about this that should excite you. Like, I don't mean to be that blunt, but okay, you couldn't even get above on all the volume and everything that's going today. See this level here? See this level right here? You couldn't even get above that today. Like, this should do nothing for you. Nothing. Like, every one is lower. So just watch it. So this was just absolute insanity today. It was just it got into a gamma squeeze. I showed this earlier. I guess you can see one of the key levels there, but let's do it this way. So I think I did it on the 5-minute. Yeah. So I showed this line here and I said, this looks like it could be a double top. And then this was the line that you needed to break and it broke it. It was in fact not a double top. It was just a base. that just broke out and just kept going. And then it just started going through every resistance level that I had. So it did exceptionally well. It was not one that I played today. I understand their earnings were exceptional. I know why people are buying it. I am not buying something like this. I'm glad they had great earnings. It's not a shock they had great earnings. It's their first quarter reporting like this. Usually companies that IPO always have a great first quarter. So I'm not chasing this. This has failed way too many times on these levels. Here and here. After hours, how are we doing? It's the same. So I'm just not chasing it. I mean, I understand that people want to chase it, and I get this part of it. Hold on. Let me put this in there for those people. I get it. I understand it, but it's not something that I'm just not going to chase it. Huge volume, looks great. Call me when we clear over the $79 level now, and maybe I'll take a look at it. But right now, I would like to see it rest before pushing higher. RVLV, great numbers. Everything went great. And then we just had that nasty down day. Like, let's get rid of these indicators and let's just look at where you closed. We're going to put this down here for now. Okay. So you have a downward trend line that you didn't close above. You're right on it. And you have this lower trend line that you closed right below. So this is not something that I would buy. I mean, obviously there was a great trade today, buying the open and then going here. I mean, it's a $7 move. I mean, it's a huge mover, but it's not something that I would play with. See it get through those three levels, get through these three levels, get back over 51.64, and then you can look at it. Until then, I would avoid it. This could be a 1 or 2 day short and then roll again. And it doesn't mean that it's over. It just means that you're going to base for a while, which is actually what we need to do. Shake Shack, you couldn't even get above that. You're down in a major trend here. Like, there's not much to do here at all. Gosh, we traded this a while ago, but we got stopped out. This is why you have to always use stops. Look, we got stopped out, lost $2 instead of 30. I just don't see any reason to be in this. If you were looking for, like a short idea, I get it, because now you're up here and now you can roll again. And here, look at this. Okay. You're right here. Like, it looks to me like you're going to break the 200 again. All the volume coming in is red, not the green. So it's not really what I want. Snap, I don't know. Today they got sued by someone, and I don't know if it's going to be a big case or not, but or it's just sensationalism. But you have a bullish engulfing down here. You gap the low of the 51.32, and it does look like you put support in. Let's see some follow through. The biggest level that you really have to get through on this is you have to get through this 55. Get through this 55, and then we can kind of go from there. So this was one I bought today. We went right to the 200 day, and that was pretty much it. I mean, to me, this was a gift. And then I thought we might stop at this 30.85, and you could see my timestamps. I just, kept getting out. But give me a higher high, and then you're probably going to go to this, like, up to here, and then you're going to roll again and like build. Don't chase this. Just, you have like 3 points now, another 3-4 points, but you're still in a falling wedge. You pop back in the wedge, which is great, but you're still in a falling wedge. Like, there's, it's time to build, not chase. There's a huge difference. And I like the green volume is higher than the red volume. It means people have been waiting. So space, I guess everyone thinks that it's finally going to go up. They don't reverse like that. I can't make it any clearer. Like, it just doesn't happen like that, right? When you break, you break. And this clearly broke, and it's trying to get back up in there. You can see this here, and you can see this right here, right? So you're still out of that trend, even though you're up on the day. I mean, I guess it's great for whoever traded it today at 14.5. You ran the $18, which was resistance. But this is not something that I would be jumping into. And could it go higher? Sure, but I'm not chasing this. I mean, there's obviously issues here. We went from 59 to 18. There's obviously problems. And, it's interesting. When we were breaking out here, I put this in the newsletter. We lost 4 points. It looks like it didn't trigger because it was a binary event where they were going to launch that rocket and never happened. And then Chamath just kept selling stock. So, just avoid it. Tesla did exactly what we talked about. Pre-market, again, I was all over this saying, for the people that were asking, and I posted it, hopefully people saw it. At the 200-day, you buy it. You just buy it. And then if it breaks the 200-day, you just get out of it. It didn't break. If it closes below the 200-day, that was where I get out of it. This was a really very simple trade. Right off the open, even if you didn't want to buy stock, you could have just bought calls. Like the calls were trading pretty cheap for what it was because people were uncertain. So they just wanted action, and the market makers just want to reduce their risk. So, very easy to pick up like the 600 calls. And I think that they went up fairly significantly. Question is with this, let me just go through it. What do you do now with Tesla? Look, with Tesla now, it's very simple. Get me above the higher high. And then I have a morning star on the 200-day that could take me up to here. 675, 680 is definitely in the cards. A higher high, you should be all over this. It can go. So Tupperware, TUP, look, I just don't like where it's sitting. Here's when you could buy this. Okay, because this is interesting. This is why it's up here. See how this bar encapsulates these other 3-4 bars in this little section and gets all these moving averages encapsulated? That's very interesting. So what you would do is you would just assign a value to it, right? You see we're right here, right on the top of that wick where we rejected. Okay, see how that fits right in here and why we tried to get up here and then we failed and then boom. So if you get a close or you get a push above this wick, and the push above the wick looks like it'd be like over 25, 20. No, that's where you closed. Hold on. Oh, that's why I'm having a hard time saying it. Okay. There we go. That'll be better. So $28. So you really want to see it get to 28 and a quarter, and then you can kind of go from there. There is a lot of resistance in this chart. You have to get through all this stuff, right? And you got this. So, I mean, you have some issues. I think there's better ideas out there, but if you're looking to play this, I get it, but let me just bring this one down just a little bit so you can see this a little bit better. And yeah, you're at a crossroads. Get above that level. But you still have all this resistance in there to play with. UPST came out with earnings. Let's just go through this so you can see. It closed at 89.90, we'll call it. Okay, right now we're at 108, and you're heading to this 111 resistance. I would not chase this. Let's see how it does tomorrow. We can look at it after hours right now and just see how we're doing. And, you traded up, came back down, and now the conference call must be going great because it's moving higher. So that's good. That's good stuff. I like seeing the fact that companies are coming out with earnings and the stocks are getting higher and shorts are getting a little squeezed, which is nice. I'm not chasing this. I'm just not doing it. You might find an entry tomorrow on a shorter time frame, but go from there. Wing. This is why this is in here. And let's go through this. And then next we're going to do the XLE and the XLF, which are the industrials, energy. There's sectors for energy and the financials, I should say. So if you're going to, if you've had enough, this is where you bail out. So you see where you're at, and you have this little area right here and what's happening. You can't get above there, right? You ran to it and you rejected. So it's really important to draw these trend lines and understand them. I don't really care about these moving averages. They're completely irrelevant to me because all I've been doing is basing. They're not really respecting them. To tell me that this cross is something I have to pay attention to because there's a cloud here is just nonsense. You can see how you break down in here, right? Like, I'm more interested in the bear flag breaking than what these moving averages are doing because they're not telling you anything. And they're not telling you anything because you're in a base. To use moving averages, you need to be in a trend, whether that trend is up or down. A base does nothing for you, nothing. So what are you doing now? You need to get above this level. You need to flip back over this and go higher. Until you flip this line, you can't buy this. If you break the low of this, you need to get out. That's a pretty simple trade. So let's get into this and what's going on here because this is pretty pertinent. Let's get rid of these indicators for a moment. So this is the level we've been looking at, 54.44. And this is really important, especially to people that are in Exxon and CPE because they're only going to move if the group goes higher because they're commodities. They're all tied. All their earnings are tied to it. So this was our line. Okay. Why was this our line? Because we hit it here. We respected it here, touched it. Boom. That lit us off. When we broke it, we stayed low, tested it again, got above it, had another run, tested it here in 2011, right? Couldn't close below it here. It was a clean sign that we were going to go higher, form this wick, and then boom, you can see that this is a substantial level that you must pay attention to. Now, you have this upper trend line here that's a multi-year, 7-year trend on the monthly. It's fine. It's not the end of the world. But the fact that Israel and Palestine are going at it, and there's a war essentially going on there. I don't know if you saw the footage, which is unstable for the Middle East. That makes oil prices go up. Oil prices sold down. So you need to be really cognizant of this level. This is telling you, I'm going to go back to the daily now, but you see where I'm going with this, right? When I'm talking about this 54, 55 level, you can see why it's significant. It's been significant since 2005. It's been significant for 16 years. So that's why we're looking at it. Let's get into this. So what do we do here? Right? And this is like, now we're going to get rid of all of these horizontal lines. We're going to get rid of all this. Okay. And then we're going to get rid of these. So I talk about this pattern all the time. When you have a wick here, and then you reject and you come down, and then you try again and you get a wick here, and you try again and you come down. There's a technical pattern. I forget the name of it for candlesticks, but I call them devil horns because usually the wicks are a little longer and they look like horns. Okay. This is the face of it. And this is what you're dealing with. Until this gets above that level, I would be very cautious buying any of the energy names, even the ones that I recommended. I would not be feeling warm and fuzzy until I get above 55.50. To me, the reason I pick that level versus the 54 level is because that's a monthly chart. And we don't know how the month's going to end. But on the daily chart, we can always drill back, right? So on the daily chart, you have to get above that level before you start buying energy stocks again. That's just my opinion. You do what you want with it. But I could see how people will start selling oil here based upon this. They're going to sell, look, they sell commodities based upon technicals. This is a reflection of the technical market. Just be aware of that. I mean, I understand how this is looking for a multi-year trend breakout. Maybe it happens, maybe it doesn't, but I sure am on the sidelines until I have, a pattern. And let me show you what a pattern looks like, right? We talked about this the other day. We put this up here and said, look, on this daily, you're heading right to the top of this channel. It could sell back down. What did it do? It sold back down. Financials have had a nice run. Hey, it might be time for a little bit of a rest. This 12-year base is not going away, but for me to go and retest that base is not the worst thing in the world. Okay, that's a 15% drop. If something like that happens, financials are going to come in. Now, that doesn't mean sell Riley and sell all of them, but just understand that there could be volatility. Where you really have to look at, right, this is technology on the monthly. Technology keeps going up. You tried to have a reversal. You had a big sell, right? Let's look at this on the daily. What do you have going on here? Let's throw these indicators in for a moment, okay? Look at how we're respecting the 50-day and we broke below it, and now we're setting up a morning star right after it. Look at this little pattern, and I'm doing this for a reason so you can understand the differentiations between the two. Okay, it actually goes a little higher, but we'll just leave it there. And you can see it right here. So yeah, if we roll and take this out, I'd be concerned, but on the XLK, it looks to me like we're going to go higher and retest this base. So that's it. As always, please reach out if I could be of help. And I will see everybody tomorrow. In the comments, let me know how I can make this better. I think the sound's pretty good. I think I have a way to make the video better as well that I'm working on. Have a good evening, everybody.